Hey all, welcome to ShareTreck. Today's video is going to be about Regeneron, which is going to report on the 4th of May. I would like to present whatever I have been able to find about Regeneron and give my own opinion on what to expect from Regeneron when they report earnings on the 4th of May. So let's get started. Not all of us follow all the companies, so I always try to get a background of the company before going into any analysis. So here's the background for Regeneron. It's a biotechnology company, and it engages in the discovery, invention, development, manufacture, and commercialization of medicine. So it's the full life cycle. Its product portfolio includes these fabulous medicines. I don't want to try to pronounce them because all those names are really crazy, but they bring in the money, so we are interested in it as an investor. The firm accelerates the traditional drug development process through its proprietary VelociSuite technologies such as VelociImmune to produce optimized fully human antibodies and biospecific antibodies, and they use some genetically altered mice in order to do all these things. So that's the background of Regeneron. In terms of what's happening in the pharma sector, big pharma companies like Bristol Myers, Gilead, Eli Lilly, Sanofi, Merck, and Glaxo bet on both earnings and sales, whereas Johnson & Johnson and Novartis were able to beat the earnings but miss the target for revenues. What will Regeneron report? So that's what we are trying to find out in this particular video. And the street calculation is that Regeneron's top line is likely to have been driven by strong demand for Eylea and Dupixent during the first quarter, based on their monitoring of the market for these two products. And on the flip side, in January, the FDA decided to restrict the use of the Regeneron COVID-19 antibody cocktail. And that is likely to have resulted in a little bit of loss in additional sales. So when the net off, overall, the street is expecting that Regeneron would do better than it did in the last quarter, and the results are likely to be positive. That's the street expectation. In terms of financials, you can see that the third quarter in the previous year, if you look at this column out here, 30/9/2021, the third quarter seems to have experienced some kind of a dip. And as far as the retained earning is concerned, it has been steadily increasing. That shows that this company is in good health, and they are likely to continue increasing their retained earnings in the same ratio going forward because they have got several candidates in place. When we look at EPS also, we see a dip in the third quarter of the previous year. And if we were to look at the sequence of earnings, it's been persistently on the way up, so we can expect the same direction to persist in the first quarter of 2022. Here is the problem with coming up with analysis and forecast for companies in this current environment. If you look at these three big firms, Bank of America is putting Regeneron into underperform. They have taken it a step down in rating, and they have cut the target price for the company from $675 to $575. Whereas Morgan Stanley has put an equal weight recommendation and increased their price target from $605 to $632. So this is diagrammatically opposite. And Barclays is putting an overweight rating, and they have upped their target from 700 to 745. So when all these big guys with such heavy pay packages have analysts and others coming up with these kind of varying estimates, what am I supposed to do? I don't have those kind of resources to do research, and I'm thinking that Regeneron will definitely do positive. Whether it's going to outperform on revenues, I don't know, but margins should be pretty good. Other facts are that these are the things that you're likely to hear in the Q1 conference. Regeneron has purchased a company called Checkmate Pharmaceuticals for $250 million. The takeover is not yet complete. There will be a stage 2 of this where Regeneron will buy the remaining shares. But Checkmate is a clinical stage biopharmaceutical firm focused on developing technology to treat cancer. And more information about this should come up in the Q1 earnings call. US FDA, as I explained earlier, has extended its review of Regeneron's full approval of its COVID-19 antibody therapy. We'll have to wait and see what happens. FDA wants to examine more data, and they have not yet requested that data from Regeneron. So it's a developing story. We'll have to watch what is happening. And in terms of strategic collaboration, we will most probably hear about Regeneron's strategic collaboration with Regeneron for VG-AAV caspase for one inherited retinal disease target, and an option for an exclusive license to develop and commercialize the gene therapy product. So we will hear more about this probably on the Q1 earnings call. Regeneron is eligible to receive upfront payment, research funding, options exercise fee, development and commercial milestone payment, plus royalties on net sales. So there is more to this, and we don't have that in the press yet. So this will probably come up in the Q1 earnings call. In terms of street expectations, Regeneron is expected to return an EPS of $9.72 per share and a revenue of $2.686 billion. The actual will come to find out on the 4th of May. Please let me know what you think about this review. I have kept it short. There isn't much information available, but this is the max I could get together. If you like this video, please don't forget to put a like there so that YouTube can share this with the extended audience. And if you're not a subscriber, please subscribe for everything biotech and genomics out here. Thanks and have a great day. Bye for now.